Well, the entire space of fintech, especially around credit lending, has been one of the most hottest spaces to watch out for, and this year is started to be no different. I really decided to come by at the MoneyTap office here in Bengaluru. Joining me is Anuj, the CEO and co-founder. Thank you for taking out the time and joining us. Credit lending has always been a hot space, a massively underserved market, even while there's so many players. Talk to us, Anuj, about, when you entered the space, one of the first players around credit line, really. Now we have so many more players who are promising a few thousand rupees up to a lakh in a few minutes.
Right.
What sets you apart from the so many more players that are now there?
Well, I think you said it yourself. When we came into the market, there was not a concept of a credit line that existed at that point of time, right? So, we're creating a category in itself, which is a new credit product, which is called the line of credit. To give you maybe a 2-minute description of what the product is, you download the app for free from Android or iOS, and a chatbot comes up and asks you, hey, what's your name? Give me your details. We do need your details, like your PAN number and where do you stay. In 5 minutes, we approve you for a line of credit, right? Even the KYC, etc. happens on the app. Now you get a line of credit for, say, a lakh of rupees. From that lakh of rupees, you can take out as low as 3,000 or 5,000 or 20,000 rupees, whatever you want. And you're paying interest only on that 20,000, not on the balance 80. This kind of a product didn't exist in the market when we launched it about 3 years back when we took it to the market. And so far, that value proposition is what is stuck with the customer, because there's complete flexibility in the hands of the customer.
And you know that there's a credit line waiting for you, a pool if you want to go tap into.
Absolutely, right.
And sort of get by. Interesting. Talk to us about the consumer insights. Of course, you're targeting the salaried class, the millennials, so to say. What's the average credit line or a loan size that people are increasingly tapping into? What are they using? These are short-term loans. I know the EMI could go on to be several months, but what are people increasingly borrowing on the app for? Give us some sense on.
Sure. So let me answer your first question. The average line size is about a lakh of rupees. So I get a lakh of rupees on the MoneyTap app for me to use whenever I want to do it. So I can take out even 3,000 or I can take out the entire lakh. So that is up to the customer. And in there lies the answer to the second question, what are people using it for? So it's not every day that people need 2 lakh rupees, 3 lakh rupees, right? We are targeting a customer who earns maybe say 30,000 rupees, 35,000 rupees per month. For him or her, money and credit is probably every once in a quarter he or she needs money. I have a school fees coming up for my kid. I need 35,000 rupees to be paid after 3 months. Where am I going to get the money from? My salary is 35,000. So I have to go. Do I have to borrow from my friends, from my family, or a bank is not going to give me 35,000 rupees? And so then I have to go ask my employer for a salary advance. So
which is a long and tedious process in itself.
Which is a long and tedious process, and employers may not necessarily want to give it to you as well, right? Because they have their own capital constraints. So if you don't get 25,000 rupees, 30,000 rupees, where are you going to go? And that's where the credit line comes in. So we see a lot of people using the credit line for very basic needs, right? For education, for medical emergencies, for home renovation, for festivals.
Vacations?
Vacations, right? So for example, that's a very interesting use case, because you'll be surprised. People who earn, say, 5 lakh rupees per month, they also take the MoneyTap credit line. And when I ask them why do you need my credit line? Yeah, I'm going out of the country. I just need 1 lakh rupees cash just in case.
Oh.
But the guy who's earning 35,000 rupees also, he wants to go to, say, a Ladakh for a holiday and it costs him about 55, 60,000 rupees. He definitely needs cash, right? Because everything will not work on a card, and credit card is not for everyone as well. So the travel is a very interesting use case as well. So we spoke about travel. Diwali is coming up, or Dussehra is coming up, or Christmas is coming up. I need to do up my house. I need to do some renovation. I need some 70,000 rupees. I bought a car. I spent about 10 lakh rupees on the car, but I need a lakh of rupees for accessories. Where am I going to get that?
Interesting.
You will be surprised. One of the use cases is people, they buy a house, but they need upfront cash for registration. And that can be quite a bit, right? But at the time you want money, you don't want to be scampering around. And for 30, 40, 50, 60,000 rupees, you're not going to go to a bank.
Yeah, got it.
Right? I don't think a bank will give it to you in the first place, but I don't think you are thinking that let me go to my neighborhood bank and go ask for 60,000 rupees.
Got it.
That's the
interesting use cases, that borrowing money for a host of things to really
Yeah.
get off their mind. You know, a loan disbursement rate of about 2,000 crores, excellent, looks
Actually,
good.
more than 2,500 crores.
2,500 crores, excellent, looks good on paper. What's the NPA rate like? Also, because I ask this if you were discussing, a lot of startups we started with discussing are willing to offer you short-term loans, and everyone's talking about how we are slowly sitting on a ticking time bomb. It's an initial journey, but something that's waiting to explode.
Well, let me answer that in two parts.
Yeah.
One is, what is our product exactly? So while we give short ticket size, you can take out 3,000, 10,000, 25,000. Our tenure stretch from 3 months to 36 months, okay? And an average tenure is upwards of 18 months, because people get comfortable with our product. So they may take out 5,000 for say 3 months or 10,000 for 3 months. Then they get comfortable with the product. Then they may take out 50,000 for 18 months, 24 months. So we are not a very short tenured 15-day, 30-day product. That's not our product, right? But we give you the option of having take out short amounts or mini loans as such, right? So, and that is the reason why when you say that it's a ticking time bomb is when you go in, when your only a product is, I will give you 5,000, 10,000 and pay it back to me in 15 days. For that math to work out, what you charge the customer is a very high interest rate. On an absolute value, it may look like I'm asking you, pay me back only 11,000 rupees after I've borrowed 10,000. That's 1,000 extra. But, the customer say, yeah, it's okay, 1,000 extra. But if you calculate the interest rate, that is a very, very, very high interest rate. And when you start lending for 15 days, 30 days, you get the customer into the habit of borrowing, which is not good, right? And that is what you're referring to, maybe we are ticking time bomb, right? With MoneyTap, we in fact don't encourage this. In fact, if a guy who borrows frequently, we try and counsel that person on the app that do not borrow.
But what's the NPA rate like on the platform?
We have a less than 1.5% NPA.
Less than 1.5%?
Yes.
All right. But talk to us about how, you have partnership with banks, of course.
Banks and NBFCs.
Yeah, banks and NBFCs. When an account really turns NPA, where does the buck really stop? How do you go about recovering those loans? We've also now read reports about, school kids, college kids really called by recovery agents to say, pay up. You might have taken something, but pay us back.
Yeah, I mean, listen, I agree with that's not good. And that's one of the reasons why we have taken a decision to not enter the student lending category. So we don't lend to students and we don't intend to lend to students. In fact, if you look at it, we have, I think, 24, 25 is the minimum age, and that also is a very small percentage, because at least they've been they've been working for about 3-4 years, so they have some income to show, right? We don't believe that maybe student lending may be the right thing to do. Maybe there's some other products that might be catering to them, but giving them $1 lakh we don't believe in it, so we've not done it. Others might, so maybe that's the reason
very
why.
consciously you're staying
very
away
consciously we are staying away from that, and we continue to do so.
Right?
And that is the reason why the collection, when you say that you have recovery agents going, that's not good practice, and that's where sometimes customers are conscious about who they're borrowing money from. If they borrow from a nondescript lender, they could do some collection practices which may not be healthy. And if you're going to a branded person or a person who's created some time in the market and stayed in the market for some time, they may not resort to these things, because for one customer, why would they let the entire brand go down the drain, right? So, I mean, these are not good practices. I think we hear about them off and on, but that's one of the reasons why we've stayed away from student category, because we believe that, they don't have an income, so where are they going to pay from, right?
It comes down to pure play economics.
Unless and until I am underwriting his dad or mom, in which case my loan is, or my credit line is to the parent, not to the student. That's a very different thing.
That's a very different model to really look at. You're using technology to clearly, sort of push this across. We have had the traditional lenders for the longest time doing what, startups now are doing. They're still trying to crack, but you're sitting on a data mine, and you know exactly how the consumer behavior works.
Yes.
So technology has really set you apart. What's your edge as far as technology is concerned? Even as traditional lenders are really upping the game. They're coming up with this short-term loan access, 5 minutes directly to your account. They know there's a market out there, and they're really upping the game.
Well, the answer lies in just looking at how your employee base is structured, right? Half our employee base is in technology, data, product, tech. I mean, we don't have an IT outsourced team. We don't call our tech department the IT department, right? Which is what typically most people end up doing, right? Which is why we believe that we invest in technology. We invest in the latest data science models. We invest in product. We invest in user experience, design. these are things that we believe, sets us apart from the market, right? We work with banks and NBFCs. By the way, the banks are one of the smartest people out there. They've existed for many years. They're profitable as anybody can be, and they know how to do business. No doubt about that. Which is why it's not about banks trying to eat us or we trying to eat them. It's about partnership, and it always will be like this, right? I mean, I think 2019 has proven that, or in fact 2018-19 has proven that it's not that the fintechs will not exist. It's not that the banks will eat up the fintechs. I think there's a little bit of you have to find their right balance, how to work with them. You bring your own strengths, which is data, which is technology, which is customer, which is innovation, and I can move fast. And then you partner with regulated entities because they have the pools of capital, they have the regulatory licenses, and they know the best practices. So can you take their best practice, use technology and make it so much better that the customer wins?
Yeah, so
and
the partnership is really crucial.
Yeah.
You recently got the NBFC license as well. What changes? Of course, the bandwidth for you to now go out there and experiment is a lot more. The regulatory environment really eases up. What are you really planning to now do increasingly with the NBFC license?
Well, with our NBFC license, it gives us a lot of options to go after different kinds of segments. Like you already pointed out, do experimentations. But more importantly, it gives you the complete end-to-end responsibility, which, before we had the NBFC license, there was a shared responsibility, right? So we are very serious about being in the lending business and being in India. And if you want to be serious in the finance business, you are better off being a regulated entity, right? Yeah. So I will follow all the rules and guidelines laid down by the RBI, and I will follow them. But it will allow me to have a much larger share of operations, longevity as far as my operation is concerned, because now I'm a registered entity and I'm following all the rules, right? I will bring all the expertise that I built on the technology, the customer, the innovation, and put it into my NBFC license. That will allow us to give a far better product and a far better experience to the customers, right? I will raise money on my own books. I'll be able to lend money on my own books, which will allow me to get a larger share of the revenue pie. Yes, the responsibility also becomes on my head of collections and underwriting, which we're already doing anyways with our bank partners. But here it's us only.
It's massive in terms of opportunity.
It's massive in terms of opportunity, but it's also, it's a big responsibility, and we take that very seriously.
Interesting insights chatting with you. Thank you so much.
Thank you so much.
Thanks.